Hong Kong stocks rose nearly 3% to close at their highest level since March 2022, boosted by China's massive economic stimulus proposals. Mainland markets are closed for a week-long National Day break. The Hang Seng Index ended the session up 2.8% at 22,732, while the Nikkei rose 0.25% to 38,650. U.S. stocks closed lower ahead of U.S. monthly payrolls report and as investors kept a watchful eye on the growing conflict in the Middle East. Data showed that the number of Americans filing new applications for unemployment benefits rose marginally last week. Meanwhile, investors are eager for more data on the labor market after the Federal Reserve last month cut its benchmark interest rate by an unusually large 50 basis points, the first reduction in borrowing costs since 2020. The S&P 500 lost 0.1%, while the Nasdaq Composite was flat, and the Dow Jones Industrial Average fell by 0.4% to 42,011. And the JSE a tad lower down, just under 0.5% at 86,419. The rand currently at 17 rands 46 to the US dollar, 22 rands 99 cents against the pound, and 19 rands 26 to the euro. Gold is currently trading at $2,658 an ounce, while platinum is at $1,001 an ounce, and the price of Brent crude oil jumping to $78.90 per barrel. And Warwick Lucas from Vunani Securities is our market watcher for today. Warwick, thank you so much for joining us on Point. Let's take a quick look at the week that was and what stood out for you in the market space.
Right, thank you, Diabo. And what I'd say is that the market has continued to look at the strife in the Middle East, I think with an eye to the issue of, well, can it escalate and what damage can it do? So in the case of the Middle East, of course, the primary commodity that is there is oil. Of course, Israel itself does not sit on any oil fields, however, Iran does. So it has rolled over a little bit into some higher oil prices, as you just noted there earlier. But so far, we're not seeing an awful lot of direct price action, perhaps some in gold, some in a stronger dollar, a little bit higher in the US bonds there with a fear of inflation, but so far not a significant move.
Yeah, but what would this mean, Warwick, for us here locally if these geopolitical tensions continue and we see that they already have impacted the crude oil price? What could happen locally to South Africans that are watching us today should the tensions not ease up in the Middle East?
Okay, so in terms of equity markets, I would say not an awful lot. Equity markets tend to continue to stay focused on what is the cost of capital and ignore the kind of humanitarian tragedy that we see coming from wars. But I think we can take some kind of lesson from the recent Ukraine war. The reason being that Ukraine, for example, sat on large supplies of very important agricultural commodities, which helped to trigger a bit of an inflationary spike back in 2022. So I think turning that around then to what are we seeing in relation to the current Middle Eastern situation, it flows around to oil, first of all. Does, for example, Israel retaliate by striking Iranian energy infrastructure to hamper that enemy economically? It is feasible. I believe Israel and the US have been in extensive discussions about will they, won't they? So that is a concern there. We see that coming through in oil prices. It does also mean that there is shifts in global foreign exchange. So right now we're seeing the rand weakening a bit, and that's against the dollar, which is a safe haven currency at times of military upset.
Yeah, we're currently enjoying the benefits of lower petrol prices. Should the price of Brent crude oil continued to climb up. Do you think that the currency strength is likely to offset what could potentially be another higher price or in the price of fuel in future?
Okay, so the fuel price at the moment did have quite a lot of fat built into it, in that the so-called recovery price, which is the kind of midpoint at which fuel prices in South Africa are set, was actually running at quite a big surplus. So last week it was about R1.40. At the moment it was sitting at about 80 cents. So we actually do have a bit of cushion. I do believe that government was due to set a lower fuel price. Unfortunately, I think that will be somewhat off the table in the wake of this recent weakening in the rand and the strengthening of the oil price. But I think the good news would be there's still a cushion there. We're certainly not yet ready to see any hikes in the local fuel price.
All right. Let's turn forward to the week ahead. What can we look forward to market-wise, and even interesting data, Warwick?
Look, I think the most important thing is the market settling down and figuring out how to digest the Middle Eastern news. I think the more important thing we're looking forward to is what happens with U.S. non-farm payroll. It's always messy data, but markets do respond to it. We're also looking to see whether the EU and the UK are going to be leaning towards interest rate cuts. That should be the case. And finally, and possibly most importantly, progress in China with their various stimulus measures. They're very important to us as South Africa, not only because of their purchase of commodities, but of course, Naspers, which has such a big stake in Tencent, also being a major index stock locally.
I know I'm just pushing the envelope here. You just talked about interest rates and wondering next month we're going to see the MPC sitting again. There's been widespread speculation that we could see another cut in interest rates. Do you think it's possible again?
It may be feasible. I mean, we certainly still have very high real rates. I think we do want to see our bond markets continue to strengthen and the cost of capital come lower. I think it's reasonable, but not a given.
All right. Warwick Lucas from Vunani Securities, thank you. We always appreciate your analysis here on Point. Thank you very much for your time. We're going to take a quick break, and when we come back, I'm going to have some sports news for you.